Hi, welcome to the new episode of Startup Strides. Today I'm joined by Mr. Daniel Glazer. He's a leading technology lawyer and the founding partner of Wilson Sonsini's London office, the firm that took Apple, Google, and Tesla public. Dan, thanks for being here.
Thanks a lot for having me. Looking forward to it.
I'm really excited about this episode. I think it's one of the aspects we just really talked about that it's not discussed and talked about enough. But before we dive into the more legal parts of the conversation, I'm more curious about your background, just so I'm curious with every guest. I think I read somewhere, I'm not exactly sure. You mentioned that the backpacking trips through Europe after university gave you the travel bug. So I'm curious, how did this kid from the New York City suburbs go from Eurorail pass to founding the London office of a Valley powerhouse?
Um, so it wasn't a straight line.
Yeah,
Let's
take your
start.
time.
No, so in the back in the late 1900s, I was after I graduated uni, I was fortunate enough to get a Eurail pass and convince a couple of my college classmates to join me, and we spent several weeks over the summer traveling around the UK and Europe, and got to London and ended up sort of parking ourselves there for about three weeks of the trip, and really just kind of fell in love with it, and said I got to find a way to live and work here at some point in my life. Went back home, went to law school, started practicing in Manhattan, at a New York law firm, and but never really kind of lost that interest and that passion, for the UK and Europe. And in particular, worked with a lot of companies coming out of the UK and Europe as they went to the United States. And that was really a focus of mine going through sort of like the first maybe 10 years of practicing. And then I ended up kind of having a fateful meeting in the early 2011, where I met with some folks at the British consulate in New York. What used to be called UK Trade and Investment, what is now Department for Business and Trade. And they were telling me all about the so-called Tech City initiative that was launched by the Cameron government in late 2010. And for those listeners who may remember, that was when Cameron basically stood up in East London and said the future of the UK economy is going to be largely digital, and it's going to start sort of here in East London and scale throughout the country. And we're going to leverage the fact that we've got this great knowledge economy, we've got these great universities, we've got great industry minds here. We're going to put it all together. We're going to create a startup tech powerhouse ecosystem. And you know what? They got it right. And that's exactly what happened. But, back to, 2011. So, he's telling me about this, and we're talking about the engagement of these companies coming out of the UK and looking at the US commercial and capital markets. And sort of to sort of paraphrase the discussion, it was basically like, well, okay, we're going to see all these presumably UK companies, tech and life sciences in particular, look to launch, scale, raise money in the US. How do we help them? And hey, by the way, Dan, if you can figure out how to do it on the ground in London, that would be brilliant, right? And so I was like, in the words of a famous US sitcom, challenge accepted, and started, kind of traveling back and forth pretty regularly, to start thinking through what is the best way that an American tech lawyer or a team of American tech lawyers can sort of really get smart about the UK tech ecosystem and more broadly the European tech ecosystem, and start to build bridges, helping those tech companies coming out of the UK and Europe through what we think of as the so-called US life cycle: launch, scale, raise venture capital, and then exit through M&A or IPO in the United States. And what we realized, pretty early on, and what we really try to focus on now, as a team, is the way that you do certain things in the UK and Europe, works really well from the UK and Europe, but it's not necessarily the way that you do things in the United States. And each side isn't always fully aware of that. And the more that we can build bridges to bring the two ecosystems, together, the better off both sides are.
That's very interesting. And what I'm curious about is, and correct me if I'm wrong, but what I, US has the startup scene really originated, then grew into this established scene in US. Everybody understands the technicalities, both on the technology side, but also like the back end side of things. And to be able to sell the services, people need to understand, what the services are, what they need, right? Moving to Europe and like establishing this kind of from ground up is such a huge challenge. Was it the challenge aspect of it that drew your attention, or was it some other reason that you were like, okay, actually, I'm going to move to London and focus on this?
So, it's funny. People always say, well, why did you want to go to London? And I always have the same answer, which is actually not sarcastic, which is the food and the weather. Which is funny because two of the most often maligned, right, stereotypically often maligned aspects of London, which actually is completely wrong. Because I'll tell you, as a New Yorker, and I'm going to get in trouble for this, but I love the food in London. I think it's outstanding. And again, as a New Yorker, I find the weather in London quite pleasant because of the lack of extremes relative to New York. Mm-hmm. But in a little bit more meaningfully, a little bit more seriously, no, I started working in the New York tech ecosystem back in the late 90s, the so-called Silicon Alley environment, right? It's funny just to kind of underscore that what's old is new again. Some of the hottest startups in the late 90s in New York were delivery startups, right? Like Cosmo.com fighting it out with Urban Fetch for who could be the top 30-minute delivery startup. 20, 25 years before the same similar business models, came up in the late 2010s and early 2020s. But what was really memorable about being in that kind of Silicon Alley environment was how new and exciting it all was, right? Like sort of like being there at the beginning of Silicon Valley in the 60s and 70s. That's a lot like what New York felt around the turn of the century, as you had a lot of these startups making New York a tech startup tech epicenter, right? For really the first time. Coming to London in 2010, 2011, 2012, what was super exciting is seeing that play out all over again. Mm-hmm. And what I was alluding to before about the success of the Tech City initiative, I'll put some data on that, right? Which is that in 2010, the year that the Tech City initiative was launched, there was roughly $100 million total invested into London technology companies for the entire year. Right? By 2021, which is the high watermark to date, there was 25 billion invested into London technology companies in 11 years, right? And what was super exciting was, we obviously didn't know that we were going to end up in the 25 billion, but that was the idea, that was the thinking back in those days of 2010, 2011, 2012. Like the excitement, I remember, like the excitement around the startup tech ecosystem in London during the Olympic summer was palpable, right? That there was a real sort of like, we can build this attitude, real can-do attitude. And for me personally, just to kind of go to your question, like, to be able to almost time travel a bit back to the late 90s and be able to do that all over again was super exciting.
So essentially the novelty, the challenge, also the conviction and the vision.
The conviction.
And vision. Fair enough. That makes sense. Wilson Sonsini is, as I mentioned, is known for representing startups, growth companies, venture-backed tech firms, and the giants like Apple, Google, Tesla, were made public through them. How does that Silicon Valley DNA shape the way your London office operates compared to other law firms here?
Let me just sort of focus on what our view without. I can't speak for other firms, but I'll talk about how we sort of view the world. I mean, the sort of Silicon Valley model of approaching working with companies, working with startups, right? Mm-hmm. Startups and scale-ups as a lawyer is it's really kind of purpose built for the U.S. market. Here's what I mean by that, right? That the U.S., as you may know, is pretty litigious, right? I'm gonna preview that by I'm gonna take a little bit of a detour, but it is not a non sequitur. It's important to understand how we and firms like us think about the world, right? That in the U.S., as you're probably aware, is fairly litigious. Certainly, if you watch American television shows, it seems like that, right? And there's a reason for that, right? And one of the main reasons for that is the approach that is taken in the United States with respect to litigation legal fees, which is very different than the way it's handled in the UK and many other places around the world. That in the United States, if we have a business dispute and we go to court and you win that dispute, in general, with very limited exceptions, you still pay all your legal fees. You don't get those reimbursed from the other side. You're out of pocket. Even though you won, you're out of pocket, right? Think about how that impacts the dynamic, right? Like if I'm a business competitor of yours and I've got more money than you, and I want you out of my market, I might look for any way to use, the threat or an actual claim, right, to put you in a difficult spot. Because I may threaten a claim against you and you say, well, that's got no merit, but your options are now, okay, prove that and beat me, but you're not going to get reimbursed your fees most likely, or you're going to settle on my terms, which also was not great, right? It's the so-called weaponization of the legal system, which I never thought of it that way in the United States, but coming to Europe where things don't quite work the same way, right? For better or for worse, I'm not making a value judgment on that, right? That it is a little bit of using the threat and certainly using lawyers as a little bit of a business weapon, right? And so what that means is that business and legal in the United States are intertwined in a way that they're not as intertwined elsewhere, right? Because here's what I mean by that. If you just think of yourself as a venture-backed startup in the United States, if you only focus on scaling the business without paying any attention to legal, you are leaving yourself exposed that at some point you may get sideswiped or even run over by the litigation train, right? But if you just optimize for minimizing risk in the US, well, you're not going to get anything done because like in that kind of environment, everything arguably is a risk, right? So the question is, and the question that certainly startup or lawyers who work with startups and scale-ups answer in the US is, how do we as a startup achieve our business goals while managing risk? How do we balance the need to manage risk while we're still rapidly blitz scaling the business, right? And so it requires the business people to have sort of an understanding of legal and have legal play a role that is a little bit, I think, probably looks a little bit unusual if you're sitting here in the UK and Europe. But it also requires lawyers to be very business minded because they can't just say risk, 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 because then how does the startup scale its business and succeed, right? And so the business people and the lawyers are much closer in that regard than they might be in other countries. Now, how does that all impact how a law firm might think about working with companies, right? So I'm gonna state something very obvious, right? Why do startups raise money? Why do they raise capital, right? They raise money because they need the money to build the business and they don't have the money, right? And so what's the bargain? What's the venture bargain? That they go out and they raise capital from investors who are saying, take my money, spend it, right? Build a great business. And the reason that we're doing this is because we are hopeful that there will be a big exit, typically IPO, M&A sale. And as a result of that exit, we are going to get a return on our capital. And even though we've given this money away to a risky venture, it's not a loan, we're giving it away. Yes, we're taking a percentage, but we're not getting anything presently out of this other than a stake in the company. What we're hoping for is that eventually that's the quid pro quo. On the exit, there'll be a great return. And that's how each side has a win-win, right? That's in an ideal world. In the US, not only do you need money to build the business, but you need to use lawyers for the reasons I just described in a manner that is different from many other places in the world, and to an extent that is different than many other places in the world, right? The way that you need to use them, the manner, is different because you need to think of them as not just, you instruct them to do something, it's more that you take advice from them, right? They're recommending to you how to build your business and how to operate on a day-to-day basis. That's what I mean about the manner that be unusual, but also you have to use them to the extent that might be unusual. In other words, you are on the phone with them, you're meeting with them, you are emailing with them, you are working with them much more robustly, right? I mean, to maybe break it down, you're using a lot more hours of their time to build your business than you might in other geographies. So how can that possibly work that a startup who needs all of this problem avoidance, legal support, legal advice, right? How can they get that? Well, in the same way that they get the money that they need to build the business, right? The law firms are acting like venture capitalists, right? The firms like Wilson, right? Like the way that we're thinking of the world is that we are investing our time in the most promising companies with the goal of scaling with them through their life cycle, right? And on the exit, there's a big transaction to work on where everybody wins, right? Where we get to take a superstar company public, right? Where we get to celebrate when a founder who's built the company for 10, 15 years, sells the company for multiple billions of dollars, and the employees do great because the employees have all been, motivated by, incentivized by options, right? Like that's the sort of, utopian outcome in the venture ecosystem, right? That the founders and the management team and the employees all do well, the investors all do well, and the professional services firms that have worked with the company for years, everybody ends up doing great. That right there is the classic Silicon Valley US approach to everyone pushing in the same direction to build a massive business. And so the thinking is, to take back to your original question, is what if we did that here in London?
Daniel, you said so many things that gave me like 10 different new questions. But I'm just gonna ask a couple of them. One of them was, so what I understood essentially, and very interestingly, legal firms, sort of like, as you said, venture partners to startups and companies. And it's not like short transactional contractual relationship. It's a lifelong, long-term relationship between startups and law firms. So I'm going to boil it down to two questions. One of them is, when you're right, like there's a lot of litigation happening in US, lawyer fees are expensive. And as you said, it's a sort of like a tool that's being used, right? You would think there would be less startups in US, fewer startups, because you're worried about, considering the amount of innovation happening in US, there's an intellectual property kind of disputes happening. Like you would intuitively feel like there would be fewer startups in US, but it's not the case. There's new startups every day. Why is that?
Well, there's the sort of obvious answer to the question, which is why are there so many startups in the US generally, and that's the entrepreneurial nature of American culture, right? I mean, the US itself is a startup. We were founded by entrepreneurs who decided, I'm going to leave Europe. Let me just go to this place where there's nothing there.
Yeah.
Right. There are Native Americans there, but there's just empty, country, right? And we're going to go over there and cross the ocean, and we're going to settle it, and that's better than staying here in Europe. That's pretty aggressive, and it's also a little bit kind of the same thing. Well, I could stay and work at my job, right? At my large corporate job, or I could just go set on my own and build this company with no actual certainty of success. But it seems like there's a high upside, so let's give it a shot.
Mhm.
Like It's so American.
Mm. So it's no matter what the risks are, essentially the benefits will, like the idea of a potential benefit outweighs the risks that you're faced.
The risk reward
Ratio.
calculus,
Mm.
right, lends itself
Mm.
traditionally in the United States to a startup entrepreneurial culture.
Mm.
Right?
Interesting.
Now, but another way to interpret what you were saying is, and this is a question I get a lot from startups in the ecosystem, is, hey, this whole thing about like needing lawyers and like litigation, like, legal risks, like this sounds really, Frank, I'll paraphrase some comments I get, really scary, right? Like how do people navigate this? And I have to kind of start by saying, well, listen, millions of companies are creating trillions of dollars of gross domestic product every year, right, in the United States. So somebody is figuring this stuff out. It's clearly not hindering American companies, right, from scaling massively and building big businesses. I mean, and this is a conversation I often have where the company starts in the UK and Europe, like, super excited about the US. We're going to go after it, and then we talk about some of these dynamics, and then it's like a pendulum, like, and it swings the other way. It's like, well, I don't know, that sounds like now a little scary. I'm like, and then I got to swing it back. I'm like, well, hold on. Like, clearly the companies that are scaling in America, of which there are many, right, don't seem to be put off by this. And remember, why did you want to go to the US in the first place? And the answer is, well, because of the capital markets and the commercial markets, right? Because it's a fantastic place to sell your goods and services. And it's a fantastic place to raise capital. And overall, it's a fantastic place to scale a business. And, being too put off by the fact that it's a different legal and administrative environment, I can understand that. But it is objectively true that lots and lots and lots of companies, either because of that or despite that, don't seem to be having a problem making this work. But it does require a mindset shift. Yeah.
It is very interesting, though. There's so many companies, large companies, with tons of capital, and as you said, they're not scared to sue anybody that will come in their way. Yes, we see so many startups being born every day. Another thing I'm curious about, as somebody who's been exposed to very different cultures, growing up in Azerbaijan, I was in the US, UK. There are different nuances of every culture, right? And as you said, litigation is very normal tactic in the US. It's a negotiation tool, essentially, what you're saying, right? But I am assuming that's a mindset kind of unique to US very often compared to Europe, right?
Relatively speaking. Yeah, because just quickly, if you don't mind, right? Like, because in the UK, for example, if you and I have a business dispute and we go to court and you win, the rule is that I would pay most or all of your fees, and that puts that puts a substantial damper, as it were, right, on a litigation culture. Because look, unless one of us is very, very certain that we're going to win, how comfortable are most people going double or nothing, as it were, right? And you see it play out in the statistics, right? And statistically, right, just less likely to have claims here. Just anecdotally, and I have this conversation all the time with companies that we're working with and speaking with. We just say, look, as a startup, in the UK, do you find yourself looking over your shoulder constantly, thinking about, like, how do I minimize litigation risk? And the general answer is no. That's not really what I think about. Like, understood. That in this, in an environment like that, which is called the loser pays environment, fees, right, where there's fee shifting, totally makes sense. But I often liken it. It's like football and football, right? Legal and legal in the US, legal in the UK, football and football. If you've spent your entire life believing that football is a ball that you kick, right? And then you go over to the States, and let's say you're not familiar with the US at all. You go over to the States, and someone says, you want to come play football? And you show up to come play football with your ball and your boots, and you end up getting tackled by these giants wearing helmets and the shoulder pads, and you're like, what is going on? It's like, well, that's football. Right? That's kind of the dynamic.
Exactly. And what I was essentially bringing it to was, how do you teach that mindset shift to a founder who's now transitioning to US ecosystem? Because I feel like that requires not just like, oh, like a business decision. It requires sort of like an internal change, the mindset, like inner world change on how to think about certain things. So like, do you struggle like, or I guess, do you see that the challenge, essentially being shy sometimes to do that? Like, do you see that often?
I mean, I do find it, I do see it be a challenge, right? Shifting, not for everybody, right? But certainly, it is a common challenge that we see rise is adapting to that different business mindset and that almost aggressiveness, right, of the U.S. market, and that culturally is not for everyone. I mean, I want to say this again. I'm not here saying that one way is better than the other. I'm an observer, right? Kind of with a foot in both camps, just noting these differences. The good thing though, and is that the thing about the United States, right, is that the way that we, and I'm a dual national now, right? But I'll use we now in the American that talk about the U.S. That that we were formed largely as a nation of immigrants. I mean, people came from elsewhere, right? And what I think that has led to is a way of thinking in the United States that, look, I mean, you can adapt to the American mindset, right? That in some respects, like, what does it take to become American? What it takes to become American is that I mean, number one, you go to America, right? But the second is that you commit to the mindset, right? And there's no actual barrier to committing to the American mindset other than you decide whether or not you want to commit to that mindset. That could be a business mindset, right? Do I want to commit to running my business where I am, I'm working, let's say, on average with VCs who are expecting bigger exits, who are expecting me to take bigger risks, right? Where I'm spending more money on all aspects of my business, but I'm raising more money and my outcomes are bigger, right? It's for better or for worse, right? It's maybe a different business mindset. There's different cultural mindsets, a whole range of different mindsets. But at the end of the day, if you want to adopt those mindsets, then there really is not a barrier to becoming American in that sense, right? Which is helpful. And I think in part why you see so many companies from all around the world, right, descend upon places like New York and Silicon Valley, San Francisco, right, and Austin and Seattle and LA to build their startups. Because at the end of the day, right, if you are able and willing to put yourself on the ground in the US and adapt to the mindset, you too, right, can build a massive American startup.
Fair, very fair. Since we're talking about legal aspects of things, I read somewhere that you mentioned you either recommend European companies to go to US very early or very late until they're fully established. It's that middle ground you say to avoid. Why is that middle ground so dangerous and should be avoided for a startup?
Sure. So let me, I'll first explain what I mean by the so-called go early or go late approach, right? In our experience, companies coming out of the UK and Europe who go to the US, and by go to the US, I'm going to say sort of like focus their business on the US market. That the most successful ones go early or go late. Go early. Go early tends to look something like the following, right? The company, let's say, starts up in the UK, and pretty early on in the life cycle of the business, founders and management look at the United States, they look at what they're starting to build, and they say, you know what? This is actually a US opportunity, right? And we need to optimize our product or service offering for the US market, right? The investors that we need to fund this disproportionately are in the US market, right? And so they might have one or more founders move to the United States, right? Raise early stage capital from the United States, optimize the offering for the US market. Now they'll often leave so-called back office functions, right, in the like less public facing functions back in the UK, where you can get great talent for maybe a more competitive comp packages, more loyalty on average for employees. But then the sort of public facing folks, there's the higher upside, let's say in the United States, because they're able to raise the capital and out there meeting with potential buyers, customers, clients, et cetera. Right. And so they're scaling as a US front facing transatlantic business from the beginning. That can be successful, right? That's go early. Go late is the company starts, let's say in the UK again, but they say, okay, we are going to focus on nailing it in our home market, right? We're going to get product market fit in our home market. We're going to raise the first couple of rounds in our home market. And then eventually, it could be because they go to conferences. It could be because companies just find them. It just be because they're just network or whatever. They start to get pulled into the US by customer traction or user growth, right? Like the B2B SaaS company based in London that one day wakes up and realizes that 30% of its revenue is actually coming from US companies, right? And they say, okay, now we've built the foundation in the United States. Sorry, built foundation in the United Kingdom, right? We can see that we're being pulled in. This is not just speculative. Clearly, there is a market there. So let's start to ramp up our focus on the US market. And that could mean initially, let's say, more and more travel by senior members of the team to the United States. It could mean hiring, contractors or consultants in the United States. But eventually, right, if they really do feel the pull, then they end up putting, people on the ground in the US. And that's usually a mix of hiring locally and or sending people over from HQ, right? And then they end up Americanizing a business that they first built and got product market fit for in the UK. That's go late. The problem with going in the middle, right? Like let's say that you start off in the UK, you start to build the foundation, you raise a round or so in the UK, and then you're like, well, man, look at all the potential customers in the US, look at the capital available. But they're not willing to fully commit, right? By let's say moving the core team to the United States. And so now they're going after the US, but they haven't yet gotten product market fit in the UK. And now they're trying to find product market fit in the US. And now they are trying to scale on both sides of the Atlantic simultaneously while not having built a sufficiently strong foundation in both. That is super challenging, right? It's super challenging financially, and it's challenging from a bandwidth standpoint from the leadership team, right?
Fair enough. So essentially what I'm understanding is that middle ground is sort of like acts really as a resource drain because of you don't have a focus. And late stages is when you start noticing this organic growth instead of this your own essentially actively taking action, but more so seeing customer traction organically, and then you're transitioning and
it's the organic traction, and then which is what I mean by that pull. You can see that that if you decided to throw more resources at the US financially and with employees, that you are pushing at an open door, as opposed to you're going to force the issue. Now that said, there are some much later stage companies that have gotten so big that let's say that they haven't yet gone to the US, that can take that risk of, okay, we got nothing in the US, but you know what? Let's try to force the issue. Cool. That's fine. Those are usually much more established scale ups that can afford, and by afford I mean in terms of leadership bandwidth and in terms of finances, can afford to take that type of risk. But for your typical sort of seed Series A stage startup, maybe even getting into Series B, you really want to focus on, okay, are we, the US is sort of do or do not. There is no try, as they say, right? You really want to either go after it early, or you want to wait until you've kind of built a strong enough foundation that you can chase the organic traction that's been generated.
So that was going to be my next question. Is that you would describe middle ground as something like Series A, Series B? That's so state.
I think it's a little bit earlier than that. I mean, it's not. There's no sort of clear delineated answer on this one. I would say more often than not, the companies that sort of almost take their eye off the ball by going after the United States before its time without actually fully committing to the United States, right? Like staying in that middle ground, tend to be somewhere like, I don't know, maybe late seed to post A or around there. That's a broad generalization, but I think it's directionally true.
And you said when they move very early, they essentially become an American company that later on focuses on Europe, right?
If they ever focus.
If they ever focus.
Yeah, like I mean, let's take a hypothetical, right? Like couple of founders from let's say Oxford or Cambridge. I don't want to pick one, right? I don't want to alienate anyone, right? So couple founders from Oxbridge decide to move out to Silicon Valley, right, and start to build business, but they keep the tech, back in Oxbridge, and they're scaling, and yeah, okay, maybe like post Series B or so that they decide to, okay, well, now I'm going to see if I can go back to the UK and Europe and build the business there. But once they're building the business in the US, they're probably going to they're building the business in the US early, they're probably going to find more often than not the same sort of dynamic that US homegrown founders find, which is, and I'm going to preface the sort of punchline by explaining something that actually it is much more common for American homegrown startups to scale to Europe at a much later stage in their development relative to how early in their development UK and European startups tend to go after the US, right? Now, the punchline is, why is this? Because the US is sort of all you can eat, right? As a startup. I mean, if you are building a business, let's say coming out of Silicon Valley, coming out of New York, whatever, there is so much to go after in the United States before you even start thinking about the complexities of internationalization, that a lot of times it's not until Series C or Series D, not always, right? But I mean, broad generalization. Well, a lot of times it's not until a much later stage of the company that you start going after aggressively UK, Europe, or elsewhere in the world. Whereas in the UK or in Europe, what's the UK population? 65, 70 million, something like that, right? The US is like 330. I mean, and the UK is one of the bigger markets in Europe, right? That if you want to scale as a startup, just based on the size of the population, you end up internationalizing earlier in your life cycle than you would in the United States.
Fair. That makes a lot of sense. And something I'm curious about, that you support companies through so many stages, right? From launch to IPO. And we discussed a few things right now. So I'm curious, like, at what point a European founder should, stop and think about US expansion, not as kind of like a plan that we just, mentioned, but more of like okay, it's a legal reality now. Like, what stage is it?
A legal reality, yeah. So let me answer it this way to start, which is sort of the bright red line, as it were, of when you sort of need like proper US setup, proper US structure. From an operational standpoint, is when you're hiring your first US employees, right? Is that the standard operating model is that unless you are creating a US parent company to take in money from US investors, which is a whole other topic we can talk about, right? But putting that aside, if you're just simply saying, I'm hiring my first employees in the United States, what do I do next? That's when you need typically proper structure, right? And that would be setting up, let's say, a U.S. subsidiary, very often Delaware, sort of Delaware corporation, wholly owned subsidiary of, let's say, a UK parent company, and then you hire the employees through the U.S. subsidiary. And why is that beneficial? Because if you hire them directly through the UK parent company, then you are potentially creating, tax and legal liability in the United States that goes directly to the relative deep pockets of the enterprise in the UK, right? You want to keep a tax and liability buffer by hiring those individuals in the United States, those US-based individuals through the US company.
Got it. I want to circle back really quickly about one thing. Very often now on LinkedIn, I see this, especially with AI, I see a bunch of companies being like, we're not a European company, we're not an American company, we're a global company, we're a generational global company.
Yeah.
Is that a marketing thing, or is it actually like a mindset and reality, considering the legal complexities of we just discussed? So is that just a marketing thing, or is that how founders now think about their startups from the get?
Well, I don't want to generalize too much. I mean, I'm sure that there are some companies that are doing it as a marketing thing, but it's also absolutely an actual thing, right? I mean, you can set yourself up as a global company now. I mean, you're going to have to pick one geography in which to incorporate, right? I mean, as your parent company, and then under that, if you want to, you sort of have the options of, well, you could either hire people through subsidiaries all around the world, or you can use what's called an employer of record service, right? And hire them through the employer of record, which is a company, sort of an HR and payroll company that hires the employees for you, right? And so let's say that the primary company, the primary startup, has a services agreement relationship with the EOR, with the employer record service, and the employer record service hires the employees. That model's been around for a while, but became very popular during the pandemic and has remained popular since then, because in the pandemic you started to see a lot more remote working, and that's obviously continued with the rise of video technology, like us right now, right? And the ease of video calls. So there's so much tech talent now that you can bring to bear globally and actually bring into a startup, because the world is smaller through these tools, through these remote working tools, that it absolutely, in the right circumstances, is the optimal answer to be sort of a global company. Now, but again, you do pick one jurisdiction, right, as your company that's going to take in the investment, for example, and for what it's worth, that very commonly ends up being, let's say, either a Delaware corporation or a UK limited. I think there are other options, Dutch BV, et cetera. But I think what we see in the market is that all things created equal, probably a Delaware corp and a UK limited are the most common in investable structures. Not that the others are not, but I'm just saying in terms of what's most common, it's probably those two.
Well, one thing I feel like from my conversations I've heard is that, and things might have changed, but the overall sentiment is when there's an expansion, right? The cost of talent in US can be quite expensive. I mean, one of the reasons startups can now stay here, build in Europe, is there's good talent and also they're cheap. They're not as expensive as, let's say, you might come across in San Francisco. So how do you advise founders to structure equity and US style like offer letters to compete with the likes of established companies and other large startups?
Yeah. So the first question, I would argue the most important question before deciding whether to hire people in the US, is that what's going to be the ROI, right? Is that it's very easy to look at the US and say, well, I'm not going to go do that because things are more expensive, or compensation packages for employees are more expensive. Well, okay, that is objectively true, but what's the upside, right? Like, I mean, the example that I often give is okay, so the head of sales that you might hire in New York, their compensation package is going to be well into the six figures, right? And then you think bonus, commission, equity, all of it, right? Like, it's a pretty big compensation package, and on its face, relative to, let's say, somewhere in the UK and Europe, like, that could be daunting, right? But if you view it through the lens of, well, hold on, if we get the right one and we've got the right product, and hopefully at that point when you're hiring that person, you've got the right product and you understand and you've got product market fit, the right head of sales then can deliver you, and I'm 10 times what they might have been able to deliver you in the UK or Europe. And in that context, maybe they're a bargain, right? But that's why the question of, let's say, comparably expensive talent in the US has to be viewed through the lens of, okay, but what's the value that you think that you can get from bringing them on? And we always recommend, like, don't just start hiring people in the US unless you made that calculation, like thoughtfully made that calculation, like how are you going to recover the cost of those individuals? Like what value are they going to bring? And on balance, does that make sense? Now, this goes back to the point I made earlier, which is you want to be pulled into the US by customer traction and user growth. Because if you're paying this very expensive head of sales and you don't have product market fit, you have no idea whether or not the market's going to have interest in your product, that's really risky.
Yeah. Yes.
Right?
Fair enough. The London ecosystem is booming with startups, with VC money. San Francisco is still as strong as ever, even stronger with AI. I also see a lot of, even some of the friends and connections I know end up, getting out of school or dropping out or leaving their job and moving to San Francisco to start their startups there. Are those two major, like from what you're seeing right now in the ecosystem, are those two remain the major global hubs of where the startups are being built, or is there new hubs you're seeing that are rising quite fast?
Yeah, so clearly the San Francisco Bay Area is sort of the undisputed, largest ecosystem. But for some number of years, there are another, there's a good probably 6 or 7, right, that are in that kind of next tier, right below. I mean, just in the United States, I mean, New York by most measures, like the startup ecosystem report that comes out every year, New York has been ranked number 2 for long time now. London, I think historically has at least for the last several years is I'm not going to say unanimously considered the largest tech ecosystem in Europe, but I think by consensus is probably considered the largest tech ecosystem in Europe. If nothing else, the center of venture capital in Europe, I think pretty clearly continues to be London. But look, Paris, Berlin, Amsterdam, exactly, right. These are all very substantial ecosystems. I mean, like, I'll give you my own perspective, and to be clear, this is just Dan Glazer speaking. It's my own opinion. The way that I kind of view the world is that Silicon Valley, San Francisco Bay Area broadly, right? San Francisco plus the Valley. The Bay Area broadly is to the rest of the U.S. ecosystems the way that London is to the rest of the European ecosystems, right? Which is that there are some pretty great other ecosystems outside the Bay Area in the U.S. We have offices in several of them. This is why we have offices in places like Seattle and LA and Boston and New York, right? Because and Boulder and Salt Lake City, because there's lots of great startups there and a lot of great scaling tech companies, right? But the Bay Area is sort of like the primary one where a disproportionate amount of the investors are, right? London's kind of the same thing. Like, yeah, like all those other European ecosystems I mentioned are amazing, but I think that there is a disproportionate amount of venture capital available in London. With just look at the VCs that are there relative to the rest of Europe. So in that regard, it's sort of like London is to continental Europe, ecosystems what the Bay Area is to the US.
Fair enough. I follow your LinkedIn. I try to read the post, the deals and everything, and I see you advise across tech, life sciences, different industries. Which of these are I guess sectors is kind of winning the transatlantic bridge? And are you seeing new domains like defense tech or even climate tech making a comeback or surprising moves?
Yeah, I mean, defense tech is increasingly an increasingly hot sector. I mean, it's funny that we're having this discussion today because we literally, as a firm, this week announced the launch of our defense tech practice. It's an area that we've been in for some time, but we've formally launched it as a dedicated practice group this week, and that is something that's an area that we see very very, very busy on both sides of the Atlantic, both on the U.S. on the one side and the UK and Europe on the other. I mean, AI obviously proceeds apace. I mean, we'll see where that gets to, right? But there is no question, and I say this as a guy, growing up in that Silicon Alley environment, as a lawyer back in the late '90s, that the parallels up to now with .com to me are they are unmistakable, right? Game-changing commercial technology. It's hard to remember now, but in the mid '90s, companies didn't have websites, or if they did, they were nascent. And, within a few short years, if you didn't have a pretty great website, you weren't really a real business. And it's kind of like what happened with AI, right? It's like, if you haven't incorporated AI into your business somehow, in a few short years, let's just look a couple years ago, it's much more of a have to have than a nice to have. Kind of like the way .com was, 30 years or so, or whatever it was. Now, I'm not saying that what happened with .com, eventually is going to happen here, but I'm just noting that it's really interesting, some of the parallels, and that and you saw so much investment come into that part of the economy in the late '90s, and clearly a lot of winners, a lot of winners that still are big companies today came out of that environment. But there was a right sizing overall within the ecosystem, and we'll see what happens in the AI space. But it was certainly for now, it still is without question that it is a game-changing commercial technology, and we'll see where we get to with it. But I do feel, generally speaking, maybe putting aside AI, that we are at one of those maybe relatively rare points in a venture ecosystem, that things are actually relatively normal, right? And what I mean by that is that if you look at economic trends in startups and venture, let's say over 30 years, it actually, if you take away all the year-on-year data points, is kind of a nice up and to the right, gently sloping line. But in a tech ecosystem, what that hides is the highs and lows. Mm-hmm. Right? Is that for every 2020, 2021, you've got 2022 and 2023.
Yeah.
The average, looks not so stark, but the individual data points within that are pretty wide ranging. And so it averages out to, I'm going to put this in air quotes, it averages out to normal, right? And I do feel like, putting aside AI a bit, which clearly is red hot, I think otherwise there's a lot about the ecosystem, at least to me, thinking back over the last 30 years or so, that over the last kind of year or so has felt relatively normal.
Yeah, fair enough. Yeah. I mean, a lot is happening, and sometimes those averages are really shifted and distorted by the outliers.
That's exactly.
Yeah.
Thank
you. But I actually, now that you mentioned trends, one thing I was curious about. Obviously, there are a bunch of different trends in different areas happening. But somebody who's so entrenched in the space, is there any trends that you're seeing in the VC startup landscapes that's not getting enough headlines or enough conversations being had about them?
Yeah, I would say is I think if you look at the ecosystem now, maybe in particular in the UK and Europe, in the mid 2020s, I think that there is a greater focus among investors now about identifying clear pathways to exit for companies that they're investing in. And that's something that I see more of today than I did, let's say 10 years ago. If I think back to the mid 2010s or late 2010s, I just hear much more thinking about, okay, not only is this a great investable business, but actually let's start to think as investors, let's start to think about how do we get the return, right? Like, what is the buyer universe? Like, is this a company that could potentially go public? The whole range of of considerations about, well, what does the life cycle potentially look like to get to an exit? I think that there's a bit more focus today than there might have been in frankly what were the early years, relatively speaking, the early years of the venture and tech ecosystem, in the early to mid 2010s or so. I mean, obviously there's been venture even longer ago than that. But in my mind, at least, I think back to the Tech City launch in 2010 with 100 million and then scaling from there. Like that feels like a good starting point, right? If the total amount into London was 100 million for a whole year, that's a pretty good starting point. I think in those relatively early to mid years, I don't know that there was as much of a focus on what does the exit trajectory look like as there is now. And I think it is helpful, I think, for companies as they're looking to raise money, as they're building a business, to think, okay, we're going to go out, we're going to pitch a great business, but let's also put ourselves in the mindset of the investors. Like, how do the investors end up with a return from our business? Because ultimately that is why they're investing. They're investing to get a return.
Do you see that very quickly? Do you see that in deep tech and biotech as well? Because sometimes I feel like I come across some companies still that get a lot of seed raises or Series A, but I don't really see a clear commercial path to the technologies that's being developed.
Yeah, well, it's a different type of company building exercise. It's a different type of investment, right? This is why not everybody invests in deep tech. Right? And not everyone invests in hardware, right? Because, I mean, actually, to go even broader, it's why not everybody invests in life sciences.
Yeah.
Right? Yeah. I'm going to be a little bit, a little bit snarky here. Like the unit economics, right? For the quantum company at A, right, don't look anything like the unit economics, right, for the SaaS company at Series.
Yeah.
Because there's nothing wrong with that. It's just a totally different business building model and a totally different investing model. Mm-hmm. But that takes a certain type of risk tolerance, right? To invest in those types of companies that can't show revenue numbers, much less EBITDA numbers, until much later stage in their development.
And more patient capital, essentially, because you have to wait.
Right.
I'm going to ask one last question before I move to very quick kind of more personality and career advice questions. Looking back, we're in 2026 now. We're still, early first months of 2026. Looking at past few years, from the post-zero interest, low interest rates to post-COVID when biotech boom was happening, to AI boom, right? How has the appetite of US VCs for European tech changed?
So I do think that certainly during the pandemic, there was a bit of just before the pandemic, then through the pandemic, there was it's kind of almost like an awakening of like, there's a lot of interesting stuff going on. I mean, I remember the blog post, I think it was Ben Horowitz from Andreessen Horowitz put out about what was then called TransferWise almost 10 years ago now. When Andreessen invested at the Series C, and that blog post said, like, we missed them the first time, but we're going to rectify that, and there's a lot of interesting stuff going on over here on this side of the Atlantic, and we're now aware of that, and in those types of investments, I think in the sort of 2016, 2017, 2018 time, someone like Improbable raising, 500 million, back in it was also in 2017, like those types of transactions, I think made American VCs kind of, sit up and take notice, because those types of deals historically, there wasn't as much of a belief that those could be done outside of the United States. Many people would think they couldn't even be done outside of Silicon Valley, right? But more and more, big companies started coming out of Europe, and that interest, maybe on the margins as maybe got stronger, a little bit weaker, but at the end of the day, there's several dozen American funds with offices in the UK and Europe.
Mm-hmm. Yeah.
right? And that's kind of to me like where the, as they say, the proof is in the pudding. Like, yeah, is that we can speculate over the U.S. interest in UK and European startups, but the reality of it is that there are a lot of U.S. funds with people on this side, and by this side I mean the UK and European side of the Atlantic. But on the other hand, I also see more and more companies, at a pretty early stage coming out of the UK and Europe and decide to put, very senior people on the ground in the United States. So, I mean, to me, I actually think the world is getting smaller in that regard, right? And it's certainly what I felt like, let's say, thinking back to kind of starting more meaningfully in the ecosystem, working with companies in 2010, 2011, 2012, et cetera, on this side of the Atlantic, and kind of feeling that the US was kind of far away. And now it really does feel like, the Bay Area to New York, to London, to Paris, to Berlin, to Stockholm, it's all interconnected in a very meaningful way. And in that regard, right, if you are creating an amazing business, the best VCs are going to find you, right? Whether whether those VCs are in London or in the Bay Area.
True, very true. It's been one of the most interesting, insightful. I learned a lot from this episode myself. I'm gonna finish off our episode with a couple of questions in terms of I'm sure there's a aspiring lawyer, or somebody is doing their degree and wants to perhaps practice law and maybe interested in startups. Twofold question. One, how do you engineer kind of your own trajectory to work in this kind of niche where you advise startups, right, as a lawyer? And two, what kind of personality, I guess, the traits really suit somebody to work in this niche, or perhaps at a firm like Wilson?
So, first and foremost, go to law school or go to a law program and do well, and become a good, become a good lawyer. And that was certainly what people told me when I got started, right? And then, it's more of a decision of joining a firm that does this type of work, and deciding actually that this type of work is for you, right? Look, it's a very different type of practice to let's say advise a global bank as a junior associate, right? Versus advising, a Shoreditch-based seed startup, right, as a junior associate, where the people who you're working with, the CEO is, could easily be a peer of yours,
yeah,
if not younger, right? Yeah. And you're fresh out of law school, whereas in the other instance, you're advising like a global bank, right? And you're a junior associate on a team with like 6 levels, right, of associate and partner before you even get to the client contact, and then even there, it's to get to the CEO, it's a very different model. And again, not making a judgment here as to which one's better or worse, but you got to decide like what fits your personality. And that sort of gets, I think, to the other part of your question is that, that I think the being able to relate somewhat as a bit of an to the entrepreneurial inclinations of startups is probably not a bad thing if you're going to work in this space, right? Because these companies aren't running themselves with the kind of structure that a global bank is running it with, right? Yeah. And they are looking for creativity from their lawyers, entrepreneurialism from their lawyers, and if that's something that you enjoy and relate to, then I think it will make practicing in that space a bit easier.
Wonderful, Dan. Thank you so much. I guess my final question would be, what's the most fun and rewarding aspect of your week?
It's probably seeing the companies both begin and close meaningful transactions, right? Begin them is that the excitement, right, of going out and talking to investors, or the excitement of getting the term sheet, right, and then the close, which is like almost like when if you're part of a if you're part of like a musical or a play, and then you're done, and then it's like the pride and the relief of having gotten through that, right? Both ends of that, I think, are really fulfilling to see and to work with companies going through that.
Thank you so much for your time, Dan. It's been a pleasure, with the hopes of remaining in touch.
You got it. Thanks for having me.